If you think there are signs the housing crisis is abating, you might want to think again. Experts fear homeowners with their best credit are still looking at a tough housing market heading into the new year. Monica Bertran has been tracking that story for us.
And John, mortgage rates may be dropping, but that isn't stemming the fear that mortgage defaults among prime borrowers will accelerate in 2010. Economists Robert Shiller and Karl say it could slow a real estate recovery even as Americans are becoming more optimistic about the economy. Both agree unemployed homeowners struggling to pay their bills will default on their home loans and increase foreclosures. Now, the number of prime mortgages overdue by at least 60 days more than doubled in the third quarter from a year earlier to 838,000. Homeowners with adjustable rate mortgages are specifically at risk. According to the Mortgage Bankers Association, the foreclosure inventory of prime adjustable rate loans rose 10% in the third quarter, again more than doubling from a year earlier. This is creating what they call a huge shadow inventory of homes that are still owned right now, I should say, but could end up on the market in the next year or so. Now, one bright spot is what I mentioned, those lower mortgage rates. And if you have an adjustable rate resetting in 2010, well, you possibly could see your rate go down. Now, the other big issue plaguing the housing market is falling home prices, as we've talked about many times. That has left millions of people owing more on their homes than what they're worth. And Shiller says that while he sees some signs of what he calls animal spirits in the housing market, John, it's a mixture, he says. In some areas of the U.S., such as California, home prices are going up at an amazing pace, he said. But at the same time, he thinks that it's entirely plausible, he says, that we could have a weak housing market for many more years.